Welcome, everybody. Today is my first conversation with another PI. Today, we have the honor of speaking to Steven. So without further ado, Steven, why don't you just introduce yourself, tell us who you are, your strategy, and then we jump into some actual questions.
Hello, everyone. Thank you very much for inviting me to this. My name is Steven. On eToro, my username is Bees84. And actually, I'm a full-time investor. But previous to that, I had a corporate life before I was heavily investing. And I've kind of traveled around the world, and I've lived in kind of lots of different countries throughout my life as an expat. And on eToro, basically my strategy is that I have a long-term portfolio in which I have a real mix of different stocks and crypto assets. And what I tend to do is I tend to look at the kind of broader kind of macro picture. And I tend to buy stocks which I have a thesis behind, in which I think that have a good ability to grow over the long term. And I supplement those long-term stocks that I have with crypto assets, something that I'm very excited about long-term for the future. But obviously, we have to limit those within our portfolio because, obviously, there's a lot of volatility that comes with these digital assets as they can't go up and down. I also occasionally do some short-term trades as well with a small portion of my portfolio. But I would say that I'm kind of primarily a long investor that looks at the broader macro picture. Yeah, it's about
pretty familiar
me in a nutshell.
Me. Steven sounds pretty familiar to someone else's on the core portfolio and strategy. Yeah. So I think we're gonna dive deep into the crypto part a little bit later in the conversation. But where do you see the markets going, and what do you think is happening, and how can we protect ourselves from what's to come?
Yeah, so I think what's happening, I think if we really look back, I think you've really got to take a step back and see what's happened in the past. Obviously, it was dominated by what happened with the coronavirus. And the governments had to do whatever they could in order to try and, protect the general population. And obviously, the way that they did that was providing a lot of stimulus and printing a lot of money. I think in that 2 years of the coronavirus, they printed about 70% of the US dollar monetary supply. So you can see that inflation was kind of always really going to be on the cards. And it was a case of really using a credit card in the general sense of the word, and putting as much debt as possible and providing stimulus to the population to get them through those times. So really what it did was kind of delay what would have definitely been a recession if it wasn't for those very low interest rates, basically zero, negative in some countries. And also the fact that they had to print so much money. It was always going to lead to inflation. So what's kind of happened since then is they have coronavirus has got a little bit better. People are back to work. Unemployment's gone down to very, very low levels, historic low levels. And they've decided now it's time to pay back some of that debt, right? So they are increasing those interest rates now in a gradual manner. Really every single Federal Reserve meeting, they're increasing those interest rates. The last one was about 0.75, so 75 basis points. And now really the market is very much dominated on the Fed's every word. When what the next interest rate rises will be, how long these interest rate rises will be. And what's happening is there's a really big it's a really tough position for the Federal Reserve to be in, because what's happened because of all this money printing is now we've got record inflation. So the Fed really now needs to, they're between a rock and a hard place. So they're saying, look, if we increase rates too quickly, then we're going to cause a very deep recession. And if they don't raise rates quick enough, then you're going to have inflation that is running out of control. So I see what's happening now is they are increasing those interest rates, and they're going to increase them really, in my opinion, until something breaks.
Yeah.
And when they feel like something breaks, then they will slow down those interest rate rises, or they will stop them, and they will eventually, I don't know when that's going to be, they will eventually pivot, in my opinion. But they're going to be very driven by the data that comes out on inflation. And in my opinion, I think that inflation has most likely peaked in the US. I think in Europe, it's going to be much later. But I think that there's a good chance that it might have peaked, but that doesn't mean that they can just U-turn straight away, right? They're going to have a long period of sustained reduction in inflation in order for them to be able to do that. So I think the markets are going to be dominated. Well, it has already, and I think they're going to be dominated by that this year. But I think there's a good kind of maybe 3 to 6 months worth of rate increases before they get to the level that they want to.
You think they're going to be raising rates for 3 to 6 months?
I do. Yeah, I do. I think they're looking at.
When are we going to get to?
I think we might get to. I think we might get to kind of maybe between 4 and 6, maybe 4 and 6%. But how quickly they do it, I mean, what they're doing at the moment, really, to be honest with you, they've actually done it faster than most people thought, and that is because the data showed that they had to, right? But what they've done is they've really front-loaded it. So they've front-loaded those interest rate hikes. So that should mean that later on, in 2023, 2024, there should be less interest rate hikes than expected. I don't think they'll even get to 2024. I think they'll have to stop them before that time.
I have.
But again, things change very quickly in the market, so I don't have a crystal ball.
They do. I think if that's where we're going, raising rates for another 6 months, then I think you're going to see some civil war in the United States, at the very least, probably in Europe as well. People can't afford living anymore. GDP is already negative as it is. You just got to stop at some point, right? And I just published a pretty comprehensive post on eToro, and then it got pinned to the Standard & Poor's and Nasdaq and Dow Jones. If you had a read of that, I'm way more optimistic than you. Let's just put it this way, right? I think we're most likely gonna raise, well, obviously at least another time, 75 basis points in the next Fed meeting, and then we're gonna see probably another 50 basis points, another 50, and then that's about it. Because then hopefully inflation has peaked, inflation will stabilize, then we start to decrease. The rate of change is going to decrease as well, and I think at that point they would have to start lowering rates. So honestly, I'm way more optimistic. So we're looking at the first 6 months.
Well, I'm not pessimistic about it, but I guess it all really comes down to, again, what those rates are going to be and how they're going to be increased. But it also is going to depend on what the Fed will stomach in terms of inflation, right? I mean, the long-term target has always been 2%, right? I think that, to me, is almost impossible. I think there's absolutely no chance that they're going to get anywhere near that. If they insist to get to 2% inflation, then they're going to have to increase the rates a hell of a lot more to do it. But I don't think they will. I think they'll probably stomach kind of 4% inflation, maybe, kind of on a longer term basis.
I agree.
But yeah, I think they'll continue to break until something kind of breaks, and then they think, right, now we've got to pivot. But
Okay, so just to summarize it for our viewers, then we've got Corona, we've got lockdowns, we've got money printing, we've got supply chain constraints coming from the East. So China mainly, where they produce all of the little things that we buy and consume every day. And then we've got the war in the East, so Russia, Ukraine, commodities, energy, etc., especially in Europe, where that is heavily dependent on their energy, and then all of this mixed up together causes inflation. And in order to fight inflation, the Fed has to raise rates because it doesn't really have many other weapons at its disposal. Let's just put it this way. So they're raising rates. So now it's a question of how aggressively are they going to raise rates going into 2023, basically, right? And then after, so how do you protect yourself? What do you do? Are you staying cash? Are you investing? Are you fully invested? And what are you doing privately?
Yeah, so it's a good question. I think a lot of diversification is probably needed in this type of environment, and I think it's really good to have some cash on the sideline. So I do have some cash on the sideline, and I've been raising some cash recently. I've been closing some positions in order to have some cash. If they do aggressively raise those rates, and there could be some knock-on effects. I think it's pretty good to have some commodity exposure of some sort in your portfolio at the moment, whether that's kind of oil or whether that's kind of wheat or some other kind of gold, silver, etc. Different subject there, but some kind of commodities in your portfolio. I think at the moment, I think what's going to happen, I think hard assets, because obviously there's a lot of inflation. So although the dollar's really strong at the moment, obviously inflation erodes into people's savings, etc. So I don't think having too much cash is a good idea either because of inflation. But I think hard assets are going to hold up pretty well in this type of environment. Something like commodities or real estate's a little bit different at the moment because
I was going to say
raising in rates and mortgages are becoming less affordable. But I think hard assets are going to be good to have in a portfolio. Right. And then in terms of like growth, I think anything at the moment, if we're talking about this current situation at the moment, I think any companies which are not particularly that profitable or have a large amount of debt are going to have a difficult time in the short term. Again, you could also argue the fact that they are at much lower valuations as well, and in the long term should be pretty golden holding on to those, but I think if you're talking in the short term, I think that there could be a little bit more pain to come for
there could be a little bit more pain to come. And obviously I'm not going to ask you what's going to happen next week or in the next 2 weeks or next month. I appreciate this is not a gambling, right? So I'm not going to ask you to flip a coin and tell me what the outcome is. So in 1 year's time, let's say that we are at the end of August 2023, are we up or down from here?
Up. I think we're up. I think
we share that view. We share that view.
Yeah, I think. Yeah, I mean, it's very hard to know what's going to happen in the very short term. I think if I looked at it, because I think as investors, we don't deal with what's black and white, right? We deal with probabilities, and then we make theses around our probabilities. And I tend to think that we might struggle for the next couple of months. I think it'll be up and down. I'm not saying it's all going to be down. But then I think it's quite likely that we might get close or be at similar to like a double bottom, which I think is very common in a bear market to retest those lows again. So that might happen, and then I can see as inflation starts to come down and there's some more positive data from the economy as a whole, then I think we're quite likely to see major major assets come up in price. Again, I think it's going to be a slow process. We might not even have even revisited those all-time highs again by this time next year. But I think we'll be higher than we are now. And I think some of those assets that really got smashed through inflation, I think a lot of those will have recovered because they're at very low valuations. But I don't subscribe to the doom and gloom picture that we're in a 10-year depression or a 10-year recession. No. I think the markets have a way of working, and I think there's some very good companies out there who are going to continue to be good companies, and I think now is very much different to what happened in the past, because I think the Fed has a lot more kind of power than it had in past recessions, and I think it will turn around. But one of the key points I think is energy dependency, and obviously there's been a huge amount of dependency on Russia in terms of oil globally, and I don't think that's going to be as quick as people think it is. It's not a case of switching off the supply of Russia and then starting it back up in Venezuela. It's a very slow process, and there's a lot of politics involved. So I do think commodity prices will be higher for longer than people expected.
That makes sense, and that's fine. I'm staying clear of commodities myself, but I'm focusing on growth tech, crypto, because I'm very patient. So I know that inflation is eventually going to peak, and then once you start lowering rates, then it's going to be fireworks. And I think we're approaching a phase where bad news for the economy equals good news for the markets, because the worse the economy gets, the more the Fed is incentivized to pause rate hikes and lower rates. So I think eventually we're going to get to that point. But interesting thoughts, Steven. Very interesting thoughts.
I think a lot of people as well, I think they think of that we're in a very similar picture to what we were in the kind of 1970s, where there's very high inflation, which is kind of true. But I think I think a lot in the 1970s, a lot of that was caused by kind of baby boomers coming of age, etc. So there was more of a demand for items which caused this inflation. Really, I think what happened, I think, in terms of the coronavirus, I think it's kind of, if you looked at the market in terms of the impact that it had, you would think, if you just looked at it, you would think there was a very serious war or something, right? Because supply chain constraints, problems with Russian oil, etc. I think there was that supply restriction during COVID, and then demand obviously increased, and then we've been left in the situation that we are now, and it's time to pay back the debts for that 2 years of COVID. No, there's no such thing as free money.
Unbelievable. But yeah, I think we're pretty much on the same page there. So why don't we move on to our favorite topic, which is crypto?
Go for it.
All right, so let's talk about crypto. We don't really have that much time left, so why don't we jump right into it? I'm going to ask you two questions, I guess. One, is crypto going to move independently of the stock market, which is what we just talked about, for the next 12 months? Or is crypto going to follow the stock market? And then after that, why don't we talk about your favorite crypto and what the next big thing is in crypto? So over to you, Steven.
Yeah, sure. So I'll start off with the correlation with the markets. So I'll answer your broader question short, and then I'll expand on it.
Okay.
So what I think is that it will be correlated with the stock market in the short term. But over the long term, I think it's going to decouple from decouple from the stock market. But to answer that more broadly, I think what will happen is that crypto really is a risk asset, right? In its current form. There's a lot of speculation in crypto, and there's lots of real world use cases as well, but there is a lot of speculation. And I think there's a lot of investors which are invested in multiple asset classes, and crypto is one of those asset classes. So I think if they're looking at their portfolio as a whole, I think that they would consider Bitcoin and crypto. And I always say Bitcoin and crypto because I kind of consider them differently.
Fair enough.
But I consider that, yeah. So what I think is that a lot of investors will see Bitcoin and crypto as a risk asset. And during, really tough times in the stock market, they're going to have money on the sidelines and they're going to reduce their risk bucket. And that could mean growth stocks, that could mean crypto, high beta stocks, etc. So I think that I think that it's quite likely to be correlated in the short term. I think in terms of, I think a lot of people say that Bitcoin is a hedge on inflation. And the way I like to see it is a little bit different, right? Because we're in a situation now where inflation is going through the roof. So a lot of people are saying, well, why is Bitcoin not going up? And I think the way I like to answer that, and if you see, I don't have it on me now, but I can explain it to the viewer. If we look at the M2 supply, so the money printing supply, it's extremely correlated, extremely correlated to the Bitcoin price. So when money printing is prevalent, and we saw money printing was prevalent during that COVID period, we saw a real more adoption in Bitcoin and an increase in prices. So I think that's something to look at. And as things started to tighten, that's when you have the issues. The other thing is, I think, as you will know as well, is Bitcoin and crypto is very much linked to the 4-year halvening cycle. And I think because Bitcoin's monetary supply is fixed, right? There will only be 21 million Bitcoin ever in circulation. When those Bitcoin halvings happen every 4 years, there is a supply shock, and that supply shock takes a while to kick in. And then once that supply shock kicks in and more demand increases, then the price of Bitcoin has to increase. It's just a simple equation. However, during that, it always gets ahead of itself, and that's what we saw in kind of November last year. Greed kicks in, and price always gets ahead of itself, and then you have these very large corrections. So the long question is, I think I'm actually fairly confident that I think Bitcoin has either bottomed or very close to bottomed. But I don't expect us to kind of reach new all-time highs until at least after the next halving cycle.
Right,
I think,
which is in 2024 for the viewers, right? And you're saying it's likely that people are going to front run this halving cycle, which is what I also talk quite frequently about. Don't wait for things to happen in markets.
I think what happens is you'll get, and it can be a very wide range, right? It doesn't have to be a small range, but what generally happens is you hit the bottom. Sometimes you retest that bottom, and that's maybe what's happening at the moment. I'm not sure whether it will actually retest that bottom. And then what you'll see, I think, for a long period of time before that halving, I think it's quite likely that you'll see a ranging pattern. And that range could be, if you ask my general opinion, that range could be anything from 20 to 40 or 20 to 45, something like that. So there is a lot of upside opportunity, and that's why I tell people don't waste your time trying to time those bottoms, because we've had a big drawdown, and it's those prices are going to look
I agree,
very, very good in the long term.
I agree. It's not about trying to time the market, but it's rather staying in the market, staying invested, because you got to think, and this is what I think as well, right? Where are the valuations going to be in a year's time? Am I going to regret buying at these prices, or am I going to be happy with my decisions? And
I think the main thing in the bear market, I think this is quite good for the viewers to understand, especially if it's the first bear market. I've experienced a few of these bear markets in crypto, so I'm kind of hard trodden to it. But I think it's very important to stay alive.
Stay alive.
Stay alive.
Stay alive. Fighting, right?
Keep fighting.
Keep fighting.
Don't give up. Absorb. It's a really good opportunity, actually, to increase your conviction in the asset class if you're really interested in it, and build up a lot of knowledge. And don't get too panicky when the prices have gone down. Obviously, I think if people are still around now, then I think that they have a fairly hardened stomach. But I think in this period of ranging, as I said, after you hit the bottom, I think this is where a lot of people can get really wrecked, because they it starts to go up a bit, and they think, okay, there's a lot of people that think, oh, okay, when it gets back up to this certain price, I'm out, right? I'm out. I've been waiting to get back.
There's the realized price chart that shows pretty much at which point people are going to make their money back, and that's a critical point to watch, because, as you said, most people are just waiting for that point to reach that point again and say, look, it was a bad investment, I just want my money back, I don't want to hear about Bitcoin anymore, and then they get out, right? And we've seen that time and time in history. Maybe if I can find the chart, I'm just going to put it up on the screen. Beautiful. Steven, your favorite crypto, just to wrap things up, your favorite crypto, is it Ethereum based on your holdings on eToro?
No,
Good.
To be honest.
What is it?
So I like Ethereum. So I have a decent amount of Ethereum, and I think it's pretty interesting at the moment with what's going into this merge, which is another subject in itself, very long subject. But if I'm being honest, I'm going to answer that in two ways.
Right.
So if I'm being really honest, I think my favorite crypto is Bitcoin over the long term. I think my goal as an individual, if we forget about what's happening on eToro, my goal is to own as much Bitcoin as I possibly can over a long period of time. So I'm not really too much speculating in that Bitcoin market. My goal is to own more Bitcoin, and that's whether that's through trading other altcoins, etc. I'm not a Bitcoin maximalist or anything. I do believe in the use cases of other crypto, and I think there's a lot of extremely exciting stuff. But I think as a future kind of store of value and a store of wealth, I think Bitcoin is the best way to do that. And you don't have too many risks there of holding it over a long period of time. But to give a more exciting answer, because that's a bit of a boring answer, and I suppose money should be boring, right?
But to give a more go, yes.
But to give a more exciting version, I do really like Solana.
Right, interesting. Wow.
I do really like Solana, and I actually was very early in Solana. So I think I was in Solana about 80 cents or something.
Wow. Pretty good.
Like in 2020, and I really like it because I think it's very fast, very cheap payments, and I think that there's a lot of activity that's going on in the Solana blockchain. They obviously have some issues because when you're when you're trying to be the fastest car or the fastest blockchain, things do break. But
still in beta, right?
But I do like the long-term potential of Solana, and I still do hold some. I did cash some out during the bull market, but I do still own some.
Do you buy Solana every now and then, or do you have enough that you like, nah?
I do, but I do buy sometimes. I think in bear markets, I tend to concentrate a lot on buying increase. So what I do generally is I use profits from altcoins during bull markets to buy more Bitcoin during bear markets. But then I increase as the 4-year cycle kind of progresses, then I go back into more risk. I basically just range on that risk curve.
Okay, so Solana, interesting stuff. It's quick, it's cheap. dApps are being built upon, so that's definitely something to watch. Okay, last question for you, Steven. What do you think is going to be one of the biggest narratives going into the end of 2022, but more importantly in 2023?
I think narratives are extremely important in crypto, and I think crypto always needs a narrative to kind of drive it forward. And really, what that is a narrative is basically a vision for the future, right? And it's people dreaming big and wanting to challenge themselves more, right? So obviously, there's been a lot of narratives in the past. As I mentioned, that 4-year halving will be a catalyst again for a new surge in the market eventually. But if I look at new narratives, I think one of the important narratives I think moving forward will be crypto gaming. I think that there's I think it's a very good narrative actually for crypto, and that is because I think that a lot of the user base for crypto is quite kind of young people, and I think a lot of people are interested in the gaming sector who are also crypto fans, and I think that there's a lot of demand in the future for these kind of crypto gaming tokens within the games to provide kind of skins, to own digital land in the games, etc. And I think that this will be a big narrative. But one of the things I wanted to say on that is I think it's important. I think that there's a lot of crypto companies at the moment that are working on these potential games. But a lot of these crypto companies don't have experience in developing games, right? So I think the most important thing for crypto games is not the fact that crypto is embedded into the game. I think it's important that they be extremely playable, extremely addictive, and people enjoy the game, and then they're using the token as a consequence of enjoying that game. So I would personally like to see some of the real game developers get involved in it, and then adding a crypto component to it rather than a crypto company driving the development of the game with the token at the forefront. Yeah. I think the token needs to be a background.
So it's pretty much the same take that the Warwick brothers have. The Warwick brothers are two guys from Sydney, actually. I think they live in Sydney, but they are from Australia. So one of these two guys created Synthetics, which is SNX, right? Yeah. So pretty good and interesting token, actually. I need to look into it a little bit more. And then the other guy just went off to create Illuvium. But it's this game, and basically his theory behind it is, I've tried a few games in Web3, powered by technology and powered by blockchain, but none of these games are actually playable. So you wouldn't really play them to enjoy yourself, to have fun. So it was like, we need to create something that people want to play, and that has this aspect on the side, which is blockchain and ownership of the skins, ownership of the rewards, ownership of your persona online. So that's quite powerful, and that's pretty much, it resonates with me very well, because it's also what you're saying as well. So I guess you guys are on the same page.
I think if you looked at, like, I remember, for example, going to a presentation, I think it was in end of 2018 or beginning 2019. with Decentraland. And I listened to their presentation, I listened to their pitch about Decentraland, and I thought, this is mental. Like the pitch was kind of quite mental and out there, that people were going to buy this digital land and that you were going to have like digital Manhattan and, you know, all these and back then it seemed like a very massive idea, right? But step forward kind of 2 years, and it actually moved a lot quicker than I thought it would. I think that was a really big vision. And I actually thought, this is a good idea, but I thought this is before its time. And I think there'll be many iterations of game developments, and some of the first games on crypto games won't be that special. But I think it's going to take a really kind of big game, like the equivalent of a Fortnite or something, a very large game, in order to drive that narrative and get some of the big game developers interested in developing crypto-based games.
We don't provide financial advice, obviously, but if you were thinking of purchasing a couple of tokens there, what would you go for? Is it Gala Games? I think it is YGG, Yield Games, Axie Infinity. Really? Would you go back there?
Yeah.
Oh, wow, interesting.
Yeah. Well, yeah. I mean, it's very hard to know which gaming token is going to win. So so for example, even if you say, look, I think in the long term, gaming tokens are going to be, it's going to be the next narrative, and it's going to be a large sector. It's very difficult to know which one is going to win, because like just in gaming, right? It's really hard to know what game is going to be popular, and there's many good games 100%. That don't end up making it. So I guess the main thing in crypto, I guess, for the listeners is to, I think if you have a crypto portfolio, I think it's really important to diversify around the different cryptos. And the reason why I say that is because I consider altcoins more like venture capital plays.
Of course.
Right. And I think that there's a huge amount of volatility with altcoins. And I think a very large amount of them will end up going to zero, or the owners or the founders will lose interest or whatever. But it only takes kind of one or two of those large tokens to get in early, like I was mentioning with the Solana purchase, in order to dwarf all of those losses that you've had with the other ones. So you're not diversifying yourself outside of crypto. Obviously, you're still subject to the swings of the overall market. However, you can mitigate the risks of specific project failures.
I 100% agree. I was an early investor in Matic myself, but that's a long story. Got it for 5 cents and then 10 cents, and then that was an interesting story. But and that one, you know, obviously I invested in multiple projects, and then that one paid off, and all the others kind of died down over the years. But so that was it happened. Yeah,
and new tokens are being released all the time. So the major tokens that we saw in that last bull market in 2021, a lot of them will survive, but a lot of them might not even be around in the next bull market. So and there'll be a new entrance.
Look, there's so much that I would like to talk about. I'm thinking Ethereum Classic. I'm thinking Bitcoin Cash. I think it's pretty dead, to be honest. But Ethereum Classic, I think, can make a comeback. So that's it. That's an interesting one. I'm thinking many other things. I'm thinking resources. I'm thinking community. I'm thinking Discord channels. I'm thinking Twitter channels. I'm thinking Telegram. So all of these things that our viewers should probably know about. But I'm also conscious that we've been talking for an hour or so. So maybe we should leave it for our next conversation. What do you think, Steven?
Yeah, perfect. That's really good. Really enjoyed that conversation. Thank you very much for inviting me on.
Thank you for giving us the time. And yeah, absolutely. It was the first time that we talked. And honestly, I must say our views are quite similar, which could be a good sign or a very bad one. We'll find out, right?
Yeah, we'll find out. But it's good to share your views with other investors. And yeah, it's
Yeah.
nice to have a similar take on the market. Shows that you're not going insane as well.
Yeah. All right. Thank you, Steven, and
All right.
talk to you
Thank
next
you very
time.
much. Cheers. Thank you. Bye.
Bye.